Hello, hello, hello. Can you guys hear me okay? Checking audio. It's the only way, once I go live, the only way I could check audio. Hello, hello, hello. I just checked audio. It seems to be okay. So hopefully people will come back. Let me restart. Sorry about the prior audio. There was just some kind of glitch happening within with yep. Much better now. Thank you, JDI. My apologies on that. Okay, let's get back to work here. Okay, so I'm gonna start over. Okay, right better. Alrighty. Yeah, there's some kind of streaming glitch going on with YouTube. Okay, so I'm gonna start over, and as I said, this back testing now, I've started working on since Thursday of last week. This has pretty well been the new focus. I thought simulating trades would be the efficient way of doing this. Obviously not. Anyway, so I've created this new backtesting PDF document. So this was created earlier today, yeah, at 8:55 this morning. Let's make sure I keep the stream open here. All right, so if you hear weird audio problems, let me know, JDI. All right, so right here, what we've got here, I'm able to create 12, 13, up to that many bots. Usually half of them are profitable. The first thing I look for is profit potential. So the ones I've been focusing on copper futures and natural gas. So I'm going to show you three different variations of this report throughout the day. And let me show you these two again so you understand what I was talking about. If you got questions, let me know. Okay, my apologies there. All right, so let's. Wow, PDF is very slow. Okay. Yep. So this is what we want here. This is the most profitable one potentially. Now, again, as I said, to stress this point, we're looking at different assets. We're looking at different strategies, trading rules applied to these strategies based upon the timing. But this is the first time I'm actually and should have started doing this at the beginning. Is the the back testing much better? So I'm going to show you what I look for. Okay. Right here, this chart is an equity curve for the last year, pretty close to it, with pricing going up. Obviously, 4 hour chart along here, so it's a 4 hour time frame. We also have the drawdown, which we're watching for, that it's within tolerance. P&L distribution, so on. And more importantly, is this right here. This is what we're looking for, the monthly return. Every month we want to make sure it's all green. So that tells you that, as you can see here, we are able to see solid momentum in the markets, okay, or for this particular strategy and asset. Okay, so the next one that's profitable is natural gas. So I'm going to show you that one as well because I've talked about um, the volatility in the markets, and they do have obviously a problem in affecting the price performance and your overall plot performance, strategy performance overall. So the copper is probably your best one so far. Um, and I'm going to show you the this next one, which is natural gas. So you can see here, we're not seeing Bitcoin, we're not seeing We're not seeing the market indices. This one for natural gas is somewhat volatile. You can see here, but this trend since late February, early March has been really good. And the peak on the decline on the max drawdowns here. So we're in a solid trend. Okay. And again, this is what we want. We want to see these positive returns each month. That's the first thing I look for. So if I did a comparison of all the other bots or strategies, just as examples, you can see here we've got WTI crude, um, and you can see the like for the copper, we usually have because they're futures. We have all the uh, futures info. I've also got a rough guide on how much it would cost you to do a trade for one entry, one exit, one contract on the full copper trade or the micro G, or sorry, the yeah, micro copper and HG, the symbol. That's what it'll cost you roughly. Um, and then what I've also got in here are the drivers from the news. Okay, I've shown that before. Uh, there's also an analysis on the news and what's the probability of the news from today, only today, where it'll continue to drive up the price. And then we also are able to do a kind of like a walk forward using AI. So it's a 95% chance that it should continue to be profitable moving forward based on the metrics. But there's this risk of high drawdown as well. Okay, so then we get into what they call a risk adjusted scorecard. Now, this is all generated again by AI. So we get a score of A, and we're using this typical Sharp Sortino Calmar profit factor win ratio max drawdown. The thing here you need to understand is that some of these optimistic reports are going to be kind of not reliable. Okay. So I'm going to highlight that in any of these that we're going through. So here we got the standard metrics as well. This one's important to know about Kelly. That's for your tolerance on your against your drawdown. You can see here 11 months, 100% profitable months. This is the best performing out of these standard bots and standard asset. So with copper, here's those months that are profitable. Um, Now I've highlighted my last long form yesterday I put out. This is very important. Is how are the institutions positioning themselves? That's very important. So a lot of it's to do with Kelly criterion, risk per trade, and how many trades per contract and the margin used. Okay, so there's that. This is another important factor here, as I mentioned, where the AI can be overly optimistic. Well, it's because it's AI. And then we have the actual. So you can see here, this might be a little too optimistic. So we need to understand that. And there is that. Okay, so that's generally each asset, each future strategy or bot that's mentioned here. Okay, so then you could get into maybe WTI crude should be pretty good. Um, it is profitable, but it's not as profitable as copper. And the reason I say that, knowing what I just showed you, you can see the drawdowns have been more recent. Okay, this is kind of risky. And then when you look again at the monthly returns, it was May that was not profitable. Thank you, Hacker Babora. I appreciate all that. Hi, how are you? So we have the negative month here for May. So that is something you may not want to put a lot of emphasis on. So those are the kind of the high priority I want to look at. Okay, when I look at these things. Then we have gold futures. So it comes back to gold, as I said in the prior session with that mic screeching or whatever it was. You can see here overall, the equity returns have been not great for gold. Okay, and so when I'm trying to run tests in simulation and in live mode with gold strategies, whatever it is, I'm not taking profit because of the returns are not as great as it peaked in the December, November, and then it just drew down. It's trying to come back. Okay, so that's why I was not able to take on trades, and you can see that clearly in the losing months as well. So that's one of the reasons why if you're not seeing the back test of all this, you're going to miss out on what is profitable. Let's say all year, like copper has. Okay, so there's that. Then we have the natural gas, which I just showed you. Okay, so so we have all the news drivers and all that fun stuff, and then we have all the portfolio metrics. Okay, and again, since February, it's been profitable. So it's been a pretty good trend since February, whereas copper's been majority of the months profitable. Okay, so Hacker Bora asks, the profit and loss is dynamic things. So I'm not sure how you mean by that, dynamic things. Yeah, this is actual. This is not projected. This is actual data from Interactive Brokers or through the CME showing you that this is real data, real profit. And one of the ways to make profit consistently is um, via trends, like the momentum of the trend over a certain period of time. In our case, we're able to measure it for the whole year. So this, in this case with Treasury, you can see we have two losing months. So you might not put as much emphasis on Treasury as well. Okay, so those are the only profitable strategies as well, or strategies against certain assets. This is a normal. The goal is cumulative profit. Yeah, yeah. Just so you understand, Bora Bora. Yeah. This chart right here, it's cumulative P&L over, in this case, 37 trades. And yeah, so there's your profit here from zero all the way up to a dollar, not much. But again, you measure on the drawdown as well. So it is cumulative. Okay, and there's some of the trades as well, last 20 trades. And that would be simulated, but again, against real market data. And then we get into the weaker strategies like crypto and all that. So what I did was earlier today, I'm purposely looking for trends. Okay, so in here, if you look at the various folders of the different sessions I've been running, I've ran 3 today throughout the market session. Hey, excuse me. So I have 3 that I ran throughout the day. Okay. And consistently, the ones that came up were copper and gold. So I knew copper and gold were the assets, the instruments that I should focus on in the markets. So what I did was, um, funny enough, what time range you capture the signal? As I said, 4-hour time frame across 1 year for your Bora Bora. So what I did was, just to show you something here. I mentioned this last week. Actually, I could probably show you the. This is kind of important here. I'm measuring my cost. Um, let's see here. I want to show you a something I've been working on. Uh, so what I did was I wanted to see the efficiency cost of all the different LLMs I use. I mentioned last week where Claude is very expensive. I'll just post this on my forum. Okay, so these are all the different LLMs that I use in the last month. So the higher the points per dollar or tokens per dollar, the more efficient the model is. So you can see here, DeepSeek is still pretty efficient. Grok Fast Reasoning's pretty good. GPT Mini, and then we get into Quen, and then Quen 3.7 Max is pretty good. That's a really good. I have to say that is a really good model now. And then we get into Gemini 3 Flash and GLM. So these, as you move down, they're more expensive. So you can see here, Haiku, Sonnet from Claude's very expensive, and then we also get into GPT's more expensive, and so on and so forth. So what I'm trying to tell you is out of the comparison so far, that's really pretty effective is um, the Quen 3.7 max. This is the best one for value that I'm finding. Okay, so I'm just highlighting that for you. So right now I have two versions of this VS Code project. In here I can run Claude Code, which is what I've used, and then I've also used the other one is just C-line or Klein. Okay, so the report I'm showing you now is generated by Quen. Okay, so that Quen 3.7. This is how good it is. So what I did was I did a comparison between these PDFs right here, the back test, against the three different time periods from today. Okay, so I did a test to see which out of that batch is the most profitable and the most cost effective cost effective strategies to go with based on the back test. And this is what it showed. To answer your question, Hacker Bora Bora, Kimi is the best agent cost. I've used Kimi. You also have to factor in quality of, in my case, code or reporting, whatever the output is. You have to factor that in. I haven't used Kimi lately. I was kind of shocked that the GLM was quite expensive. I haven't really used DeepSeek's still cheap, but the Xiaomi one is kind of up there in cost. But with the Minimax and Kilo, I haven't really tried. Anyways, let me show you this report. So what I did was I took the three different uh, PDF reports and did a comparison. So we're doing comparing these three back runs. Again, this is all using Interactive Brokers 4-hour historical over 1 year. Okay, so out of that, um, what we've got here are the profitable strategies. Okay, so when you look at the P&L, and again, this is all fictitious. Okay, but we can still use the Sharpe ratio as a comparison against everything else, kind of like a percentage. And then we also have the grade. So you can see here already another strategy that was developed uh, is this AI data center, copper for gold. Okay, I got your message here, Hakar Bora Bora on Quen with Bayesian network algo with COT and against this contract WTI. The Sharpe ratio is much. I think CL's pretty good, or what I think that natural gas would be pretty good. But the overall one that looks the best. And these are various types of strategies of natural gas, gold, and we got in there oil, and yes, I've got copper, gold, oil, and we have actually Nasdaq as well, um, and so on. So with Nasdaq, it's not profitable. That's why there's no Sharpe calculated. But yeah, it's just the equities are not too good in that. Okay, so you can see which particular asset or instrument you could focus on, which is obviously copper. And then you get into some of the other ones as well, like treasury um, and wheat as well, which are much lower. Okay, so the HG is always the top one. Okay, that's copper, and then you have the risk adjusted, Sharp versus P&L, blah 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 blah. This is important to also know is how much are you looking at for drawdown over the last year. Okay, so you can see the copper, nice Sortino profit factor. Okay, but there's a cost because of the risk. Okay, and obviously you don't want to take on too much of a max drawdown, but these are really high. But still, I think copper. Well, the top two are these different copper strategies. So anything with gold is not as lucrative based upon the backward looking data. And then when you look at just overall sector, you can see that Treasury is not doing too good, equity, but the winner here is commodities overall. Um, and then we have here no profit with the ES, which is the S&P 500. Gas, no profit. And there's some other recommendations here. All the different strategies as well. Different recommendations, courtesy generated by again of of Quen generating all this. And then again here you could see the overall recommendation as well. There was another one I created, and the recommendation was just to avoid right now equity and crypto as well, and pretty well forex it seems. So all the stuff I've done in the last few months of simulating, yes, kind of, but you want better results. I thought, oh, simulation would work better. No, classic back testing, but with the AI developed. So that's what I'm going to focus on now. Are pretty well HG and natural gas as well. That's pretty well it. Again, my apologies for the earlier sessions. If you guys got any questions or comments, let me know. I know that's quite a bit, but the back testing is really important as well. I just should have known better as well. So I'm just going to go over what we've covered. Okay, let me talk about some of these other things. If there's no questions, let me know. I'll look out for any questions you may have. I'm on the wide forum. I'll take a look at the other stream in a minute. Actually, let me try that. Hang on here. Okay, I'm just looking for my other stream. It's two streams running at once. Okay, let me just take a look at that one. If you have any questions, let me know. Consider it's like a break right now, looking for questions from the other stream. Okay, so we got Hacker Bora Bora again. Oh, Hyperstring, how you doing, man? Um, can you give us more details on using Quen to run a Bayesian network algo with CCOT? I think that's a question for you, Hacker Bora Bora. So if you want to give him some info on that. Boy. Okay, so I'm going to continue along. Just looking for both my relays. And don't see anything in the other relay. Okay. Okay, so as it stands right now, what we've got here is the different things I've shown you. So as I said, let me just make sure I cover everything. If anybody's got any questions, just type away. So let me mention about this no trades data trap. As I mentioned earlier last week, I had some big time uh, difficulty with interactive brokers, and I figured out why. Interactive brokers is not the best broker to be on for at least futures and options, because what happens is your open positions go into a stale mode. And if you open up positions and as the data gets aggregated out, as I mentioned before, the HFT shops will pick off your trades and manipulate them. So you actually lose trades as well. Let's talk about the win ratio illusion. As I said, just because you have a high win ratio doesn't mean that you're going to be overall profitable. That's why you got to look at all the different metrics here. As I said earlier, there's so many metrics you can look at, as I've shown you, to see if you have something that's winnable or not. At the end of the day, what matters is if you have a strong trend or not, and your positions are making profit for each trade as well. Uh, if you guys got any questions, comments, let me know. Just looking for anything else I can give you an answer. So, the live portfolio construction. Okay, I can talk about that. As I said before, I'm able to use the news and generate summary news reports. So out of that, I'm able to create a dynamic trading bots. So what I've shown you earlier, these different examples, those are the trading bots I'm talking about. But now I'm taking it a step further with AI, being able to show you um, what's profitable over the last year. And a lot of the trading success is driven by strong momentum in the market. That's pretty well the best conclusion I can give you there. So if you see volatility, it's hard to generally gain profit. That's what I've always experienced no matter what you're trading. Um, so we're doing a live Q&A right now. Yeah, so I guess we covered as much as I can. If you guys got any other further questions, let me know. Brendan, Leiden, thank you. Not sure if these questions were enough, but any strategy with a p-value over 1 is a walk-forward Monte Carlo permutation test. OOS data, I usually throw in the trash. I don't go to that level. Um, I could take note on that, but I think what happens is when you look at generally this one right here, this particular comparison between across all the different instruments and seeing which ones are profitable just from a performance, it seems that what I'm trying to do is it seems to be kind of consistent. So when you get into the level of p-value and what's an ordinary was it ordinary I know it's squared from the math side. I'm sure that these would get rejected. So then you're coming down to a point where the balance. So for me, this kind of works using all the standard metrics, but performing a back test with the simulated trades as I hinted at earlier. So I'm going to go with that. I'm sure there's some other tests you can run. That's one I should actually look at as an additional yeah, an additional factor. Anybody else got any questions or comments? So like I said, I'm hoping we covered as much as I can. Um, the person here that's suggested this or sparked me to do this, I thank them for that. Um, because if I continue going down the path of the simulated trades or running in simulation and not factoring in these back testing, I think I would have kind of gone down a long, long rabbit hole. But this way, yeah, you got to look for long term strong momentum strategies or instruments. And thankfully, copper exists. A lot of the other ones, because of the volatility, is a factor. Check on Timmy. Check out Timothy Masters' book, Permutation Test. Yeah, I'll do that. Thanks for these tips. These are really helpful. I mean, I learn a lot from folks like you guys or gals. Um, that's good. Uh, but this is just a classic. I don't know what you call it. It's not technical analysis. Obviously, it's just in my case, I have the best success with strong momentum instruments. So we don't have the strong momentum stock indices or even individual stocks in play because of volatility. And the one asset that seems to prove itself is copper. And the story is because of the AI data centers. There's a very strong demand for copper, and the other strategy mentioned it was the Chinese stimulus in the economy, which will drive up demand for copper as well. Anybody else got any questions or comments? Let me know. And you can see here definitely where the trades are happening. Commodities, a little bit of treasuries, a tiny bit, but equities not yet because of the extreme volatility. I could say the same with crypto, where the volatility is just really extreme. um, Hyperstrings, permutation and randomization test for trading system development, C++. Very good. Yeah. Yeah. As you know, I'm not doing C++. I kind of explained that before, where the C++ is just kind of overkill for what I'm trying to do. Um, so I've mentioned that in the past number of videos and streams. But I'm sure, obviously, you could do it in Python equivalent with C++. And it's a pretty recent book by the look of it as well. Hyperstrings. Anybody else got any questions or comments? As I said, my apologies on the last stream. There was some kind of weird glitch going on. Yeah. So I could go over all this fun stuff, but why bother? Um, yeah, I might be able to show you. Let me just see here. This, yeah. Let's see if I want to show you the more recent. Um, let's see here. Yeah. Trend following systems are the best. What I found that training, machine learning, skip trading signals on back testing signals to reduce the churn on these strategies. Yeah, that's what I try to do. But I think part of it is how long is the trend lasting and the strength of the trend compared to other instruments. That's my experience. That's why people made a lot of money with the Magnificent Seven, obviously. Not sure if these questions went through, but any strategy. Oh, we already covered that. Um, so again, this is for hyperstrings, in case people miss it. Uh, that is the one for hyperstring, but uh, also has testing and tuning market trading systems, but both sit on my desk at all times. Yeah, I'm going to assume for you, Brandon, if you're saying all times that those are the most profitable and most important books. So I think a lot of traders will pretty well fall in line that, yeah, the strength matters. Can you guys see my screen just by chance? The software I'm using, I'm questioning now. Oh boy, I have a funny feeling you're not seeing my screen. No, you should see my screen here. My um okay, continuing along from Brandon. Yes, and a specific additional machine learning signal to filter out trend following signal reduces churn even more. Right. Yes, Marcos Del Lopez gets skip take signals in his financial machine learning book. Everyone knows. Yeah, he's pretty well the standard. Um, no doubt there. Oh, but you have to take it to the next level. I see it. Okay, cool. Uh, Anybody else? Just gonna check on the other stream. I'm gonna have to trim down the number of streams here. Hmm. Yeah. So are you able to see my charts and stuff? because yeah, there's something glitchy with this software. I don't know. Okay. Anybody else have any questions or comments? Yeah, I can see my screen, no problem. Yeah, the VS Code. Yeah. Well, I got a PDF report here, but yeah, I think yeah, I see everything's cool. Minus the delay. As long as you see my reports here. Check out my question about positioning data. Um, did I miss your question here? I'm just going back. Trend following systems are the best. What I found is trading permutation. I got that. Looking for your question, Brandon. Yeah, I can't find it, Brandon. Uh, Brandon, if you could retype your question about the position sizing. What I can show you is in here. Let's take a look at one of the copper one. Yeah, it does cover the position sizing. So again, this is using Claude. So what it's using for position sizing is Kelly criterion. Let me see here. Position sizing. There is a top blurb about it. Um, yeah, hang on, I'll find it. If you want to retype your question, Brendan, regarding, is it? Nope. Risk adjusted scorecard. This is a very important one. Okay, it covers everything, all the portfolio management stuff. Um, okay, here's the capital requirement. I do know I have a blurb about it. Let me just see here. Kelly. So there's a Kelly portion there. And right here, position sizing recommendation. So what it will do is if you're using Kelly criterion for half or full, risk per trade, and max contract per size by margin. So that's why I have the capital requirements to make sure you can cover it in your account if you have the right size in your account to cover those type of trades. And that's assuming one full contract and one entry and one exit for both micro and the full contract. So this does cover it. Um, as an input to strategy many minutes ago. Uh, yeah, if you just want to type it up, I'm going through all your stuff. I can't even see anything you mentioned about position sizing, Brandon. I'd see lots of comments, but no questions. I got a question. Well, the question to you, just so you know, Brandon, was from Hyper Strings. Uh, can you give us more detail on Quen to run a Bayesian network algo with the commitment of traders report? See the last two questions. I'm looking for it. Uh, so I don't know if these are questions or comments. Yeah, you said, oh, I see. Yeah, I don't know if this is a question, but you go, trend following systems are the best. What I found is training machine learning, snip take signal on back tested signals to reduce churn in those strategies. I don't see anything on position sizing. Yeah, I must be blind here. As I said, I'd like to answer what I can for you. Oh, I see. I'm sorry. The past two comments. I thought you meant you were using position data, not position sizing. Um, well, I don't know what you mean by position data. Obviously, that could be position sizing. Sorry, position timing, but it's part of the risk in the trades. It's using the Kelly criterion for either half or full, depending upon the performance, as an input to strategy many times ago. So the position sizing with the Kelly criterion is just obviously is to measure the risk and how it's factored in for position sizing if it's a half position or a full position. If that makes sense. Yeah, you're okay. Yeah, your internet's acting up. My internet stable. It's just the software I'm on. Anybody else got any questions or comments? I think I don't know, but this is what I'm going to be using now, and I think the simulation helps. But what I was with the gold strategy thought would work, no, it didn't take any trades. So thankfully, with the back testing, I was able to figure out this and then start testing it as of today. And as I said, there was a report it did make an attempt on a trade, which is encouraging. So that's how I'm planning to proceed. It's one thing to get a strategy coded up in AI, let's say, but to execute it against real live trading accounts, another totally different thing. I keep posting, but I think the chat thinks it's spam. Uh, I've never seen that before. That shouldn't be happening. Also, for positioning data, are you using the government API to get historical weekly COT data? No. I am downloading raw data from Interactive Brokers via the CME bundle. So I'm just using Interactive Brokers data, and as I said, it's 4 hours over 1 year. So it's a pretty good balance between, let's say, high speed and medium frequency. I see. Those are the two questions. Yeah, I'm not using any COT at all. Commitment of trader reports. For those just people don't know. No. Let me show you one of the charts here. Uh, Green looks better than red. I'll find one. Uh, by the way, I do have these posted on my membership. Okay, this is what I'm. So when you look at this chart here, you can see the months and the trades over a 4 hour time frame, and you can see here a better trend. Not too bad. No, Brendan, I'm not using any open interest at all. Um, no, these are not open interest. They are just using raw price from the futures contracts. And what's really important here, just so you know, um, let's see, hopefully I can get one of these to show itself. So you should know how this works with the uh, Interactive Brokers web app. Let me blow this up here. So in here, we have three different strategies I'm testing, just as example, against real live money. So in here, we have a test before it opens. Okay. So the bot, let's say the bot gold, this one here, once it opens up and starts, once I launch it, it does an initial test on the contracts that are available. So here they are. What's in the brackets is the volume. What I'm finding is, depending upon the day, the bot will focus on the contract with the highest volume. Okay, same trading rules, but the higher volume. Um, and then you can see it will select that contract with the higher volume. This one here, and then same with the so that's a natural gas, and same with the gold as well. So every time a new bot's developed, part of the trading logic will do a test to find the available futures contract and then focus on that one with the highest volume, because without the volume, it's not going to trade, or less opportunity, I should say. So that's what it's using, is just raw price, open, high, low, close, nothing fancy here. It's just no open interest as well. If you looked at the analysis in the other one with the rhythmic as an example here, what you'll find here, oh darn, yeah, here, yeah, I don't have it in there, but one of the analysis, let me just, yeah, I might have to launch something here. Hang on. Yeah, one of my servers just crashed here. So I'm just relaunching it. Hopefully this will work. This is the rhythmic one now. This is using real rhythmic data. This is a better data, better streaming, just better overall. Let's see. Hopefully it'll also work. Um, okay. Okay. Uh, sometimes live demos never work out the way you want. Uh, yeah, for some reason it's pointing to the wrong server. Interesting. Anyways, there's always bugs. I wish I could show it to you. Okay, so continuing along with more questions from Brandon. What position data does IBKR have through the CME bundle? I'm paying for all the bundles, but never found position through IBKR API. Yeah, I showed this last week. Let me show you one of the news analysis. So this is where I collect this information. So making sure I got the right. Yeah, so this is the right. Uh, so in here, in this setup I've got for each of these timeframes that are generated, I have proprietary news that's generated. Okay, so let me just pull one up for you. So I will do this and show you the magic of things, and I'll show you the PDFs. There's two PDFs that get generated, or kind of two files get generated. Okay, so this is one example of a time frame, or sorry, a set of data. So in here we've got the trading report, the news that you're talking about. Um, okay, so when I'm saying positioning, okay, this is news now. This is all again, um, how everything's working here. Okay, let me see here. Yeah, right here. Okay, so this is crude oil. Okay, from earlier today. So part of the news, because it's all institutional level, you can see here how are the institutions trading. Okay, so I can measure out what is being traded by who and the amount sometimes, depending upon the news. So let me give you an example here. Right here. So we have asset managers. These are BlackRock, PIMCO. And again, with the news, it's overweight in gold futures commodity funds. While CTA is different type of trader, different type of participants going to be holding near record net long. Again, this is from CFTC data, okay, and that's probably getting released as of today, Tuesday, I think. So is there all these different examples that these news I can collect on? So here we got macro funds collecting LME copper via cash and carry trade, financing also using SFOR overnight futures along with options as well. 3 month, 9,000 different positions here on the puts, 9,000, 8,500, 8,000. And these are downside hedges against the China demand slowdown. So I'm able to see all the different types of positioning that these firms are taking, and it will actually tell me Is it a CTA? Is it a producer? Is it a macro fund? Is it a just trying to look for a better example of this. Um, yeah, so it tells me exactly what the institutions are doing, and that's every day. So I'm not needing to be relying on the commitment of trader reports because that comes out weekly. So I can get this pretty well in near real time. So you can see here future positioning, Euro USD short covering, ECB hawkishness, and that's the driver. Okay, and if there's Euro against the British pound, so on and so forth. And sometimes it'll tell you exactly who it is and why. And sometimes it'll give you the quantity as well. So that's how that comes out. And then when you look at the overall reports, so as an example, again, this is AI doing all this fun stuff. Um, so right in here, this is which strategy. So this is for Treasury. And right in here, these are the drivers, okay, based upon the news I just showed you. Okay. So each of these news is driving these calls and prediction. Okay. And then again, it summarizes it as well. So that's where those calls come from. It's very precise, and part of the prompting will ask for exact risk and um, exact risk and trying to quantify as well and why and what's the news factors that's driving that, and it's all driven from the institutional point of view. Okay. Okay, I thought you were talking about when specifications, small specs, commercial were positioned through their API. No, this is all driven through news. If you're trading natural gas, are you modeling weather and or storage weekly reports? Yeah, sometimes it depends what the AI captures for news. So there is talk of both weather and storage capacity. I didn't I didn't. Their news feature in their API gave that's way better than the stale COT. Yeah, with the COT, commitment of trader is weekly, so this is in near well, it is real time. So a lot of the news that I generate, so how it basically works, I put up a presentation on it. So it collects the news, generates all the different snapshots of time. So it's going to use the news, create the trading bots from that, and it's all 100% AI. So all the AI positioning in the Python code, it's all driven by what the AI thinks will be the best type of strategy for that moment, if that makes sense. So there's all kinds of things I can show you. It's both for PDF, but it's all news related, and it's been pre-programmed for institutional because I don't care about retail because it's the institutional that shows you how the positioning's taking up and why and who's doing it. And sometimes it'll give you their actual calls on if they're going to do put calls, these amount of contracts, so on and so forth. So I can see that near real time. And it's forward looking as always. Um, I get your mindset now. That makes more sense. You should build large readers to monitor option chain and the future themselves in the front back wants to see large whale orders. Yeah, I could do that. The problem is with, let's say, Rhythmic, I have experimented a lot with option chain data. I'm able to capture it, but it's very taxing on my system, hardware wise, and it can clog up the queue um, into Rhythmic, let's say. And as I'm downloading option chain data, other bots, remember, there could be other bots competing for that queue. So I'd have to get maybe other dedicated feeds, one for data, one for options, and another one for orders. So I'd have to get with Rhythmic maybe three separate feeds because it just bogs everything down. So the options chain data is very, very data intensive. I can do it. I can probably download from what the AI said to do it optimally is to download all the option chain data every 2 minutes. That's as low as I can go. And that's the limit that Rhythmic allows me to do as well. It's near real time. It's hard to get real time, and if I wanted to do it, I'd have to move up to a better the Diamond API, which is very expensive. So I just take snapshots of, let's say, every 5 minutes to get a better gauge of what's happening in the option chain. If you have a schedule C brain, don't be cheap right off the GPUs. Yeah, I'm at that point, not yet, because I'm going very slow. I do have potentially a budget for 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 a system with a GPU. Um, I was thinking of going cloud, but I don't think I'll be going cloud because of all these moving parts. 5 minutes is what I do on much cheaper API. Yeah, yeah. No, but are you doing options on futures, or are you doing options on stock? Because there's a huge difference there. Options on futures is very, very expensive, and they do put limits. You can't stream that data. Um, from what I've seen with Rhythmic, they don't like a retail trader. Usually, most retail traders or retail level traders are not going to know about the about option chain, but it's very valuable, as you know. Yeah, not on futures, just stocks. Yeah, I mean, with stocks, if you're using interactive brokers, the option chain is very easy. There's no limitation there on interactive brokers if you're using options on stocks. But once you move on to options on futures, it's a totally different ball of wax because it's more valuable, the data. So I'm just trying to make sure that you understand the distinction there. It's a totally different ball of wax because, as I said, options on stocks is very cheap. It's a commodity because everyone's doing it. But once you move into options on futures, it's very expensive, very valuable. But if I have thought about building a very specific natural gas model, doing all of this, you can. But as I said, you with the option chain, you'd have to maybe go every 2 to 5 minutes. You can't stream it again unless you want to pay for that high end API. Unfortunately, it's just how it is. But I agree with you. The option chain data is very valuable, specifically the two things to measure implied volatility and open interest, because that's all forward looking. But the closest I get is with these news reports, as I showed you as well. I don't trade single stock. I could have the capability because sometimes the institutions, what they'll do is they'll trade with an arbitrage, and they're going to use usually an ETF as one of the comparisons. So, for instance, if you're trading gold and you have arbitrage with a contract or an option, usually you're going to use the ETF as a reference because there's that delay between the ETF and the options that you're trading on. So there's some opportunity there to as a classic arbitrage to trade. There is a pretty lengthy delay between an ETF and whatever commodity in the options world that you're trading. So that's just something that I know about. I just I've just whale order strategies on natural gas trend following strategies, but I want to include the option chain and will as well combine with the weather model storage I'm building. Let me see if we can see any weather influence. So let me just see that as a search in any of these reports here. Yeah, so there's some weather impact here. So that's all built in to this logic. So here may rise on weather risk for NG as an example, and as it said, storage uncertainty. So because of that, that's all part of the built into the option chain itself. So you don't really have to know why an option chain is moving in whatever direction on the put or call. It's already built in no matter what the reason is. So that's one way to look at it. Past 2 years, weather effect in the winter months on natural gas has got me into trouble several times. Right. But if you know how to build these synthetic future contracts built in with to protect on your downside, and you can have multiple option calls. Like this is what I've learned so far, but you're using the future contract as your base to protect your downside risk. Uh, yeah, I really like this news feed from IBKR and using an LLM on it. The news feed that I'm using is an RSS news feed, but you could probably do the same thing with IBKR. But I don't know how deep the IBKR news feeds go, if they're more for retail versus the institutional. But you want to stick with the institutional because what happens in the retail space is the aftermath of what the institutions are doing. What I've showed you here in the news, this is what the institutions are doing today that will impact the retail traders in a couple of days or a couple of weeks. Uh, what is a typical delay millisecond minutes between CME options on futures and ETFs? That I don't know exactly. Let me see here. We could probably find out. I've never really measured it because I can't, but I have seen some. Okay, so here's an example here on Bitcoin, Ethereum, Cardano. This is very classic. So futures positioning, they're measuring ETF outflow pressure spot market. Okay, so that's just an indication that obviously that ETFs people are taking money out of these ETFs for crypto because obviously they anticipate losses, and that obviously shows pressure in the spot market. So when the institutions know, they'll do whatever the call is. So in this case, this is what they do. Plus, you can see here on the Bitcoin and Ethereum options may spike in short dated tenors as sellers dominate. So this is very good to measure this. Let's see what else there is in terms of delay. So here's gold, GC net long trimmed CFTC by ETF inflow for GLD, offset selling institutions using GC-SI ratio as gold silver trades long gold, short silver as silver underperforms. Okay, and then it tells you what they're doing. This is the amazing thing. So put spreads dominant, buying 4,400 put, selling the 4,200 put in GC Q226, implied correlation between the GC and silver 6-month contracts. So there's your hedging. So this is like miners are going to do this for Barrick, rolling hedges via zero cost callers, selling calls to fund purchases. So this is telling you exactly what's happening in that space. That's how good it is. That's how important this information is. This is telling you the direction of price because of this event or this call and how the institutions are thinking. Quant doesn't cover this, unfortunately. This stuff is more fundamental. What is a typical delay? Yeah, so in terms of typical delay, hyperstrings, as I said, I don't know. I can look for anything that might show it. Call demand resumes. 4K strikes on Ethereum ETF approval. Hopes. Um, some of these are pretty good. All you can really measure is the inflow. That's all you really can do on an ETF, inflow or outflow. That's pretty popular. But I have seen some. I'm sure ETF. You could probably get that answer in in uh, in a prompt to an AI for sure. Uh, so yeah, but you can see inflow and outflows used a lot. Outflow. So that's a pretty important indicator right there. And usually those can be factored in as whale traders. Actually, let me see if I can type this in. So we are using. I could probably find out that question for you. Hyperstring. Uh, let's see here. Okay, I can do this prompt here. Um, so we're using C line. Okay, how long? I think this is Quen. The delay between option uh, option data and corresponding ETF data. So this is one of those classic arbitrage. So off it goes. It'll give you the answer you're looking for. So just so you know, from this perspective, I may move off of Claude Code. It's so expensive. Using this method with VS Code using Klein, this is a pretty good, uh, pretty good way to do your coding now. That's what I'm finding. Same thing, you chat, nothing changes, changing the model, making it more affordable. What I found is the Quen is really good. Users asking about, so it's just telling me what it's doing, so it's thinking. I love all this stuff. This is awesome. So what I'm saying is, if you want to save money on the AI development front, you may want to switch over to Klein and maybe hook it up with an open router or something. But we'll get our answer for you in a minute. Hyperstrings. Yeah, I just find Claude codes too much. I've already fed in. My billing cycle comes up on Saturday, and I'm expected to pay about 300 Canadian. Yeah, 300 Canadian. I've already spent because I got so close to to exhausting the account. I just put in another $100 US, $90 US, just to keep me going until my next billing period. And that's courtesy of Claude. Uh, oh, so it's making some questions here. Let's see. Here you go. So last trade, ETF equity. Yeah, so you're looking at 20 to 100 milliseconds. Options, 200 to 1,000 milliseconds. So I'm going to estimate you're looking at, on average, 500 milliseconds for you hyperstring. And then you get into the lag on liquidity, calculation overhead, blah, 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 blah. Right? Again, this is the amazing thing about chat with your code. No need to hand code, as I say. But it's really good to answer your question. So to answer your question, hyperstrings, you're looking at probably 500 milliseconds. But I mean, for us, we can't really take advantage of that. But if you're definitely trading in a data center, like as I said with Aurora, you're going to be able to cut that time down because that's doable on that arbitrage opportunity. So here you can see it's mentioning about stale data. That's because I'm on interactive brokers. It happens all the time. You guys got any other questions or comments at all? But well, I could show you the spreadsheet here on my token usage. It's pretty shocking. Just pull that file up again that I showed you. Um, yeah, here. So if you want to see that token usage, you can go onto my forum for that. It's my most recent. How much is RSM newsfeed? RSM? Don't know that one. I think you can spend not very much money, $40, $50 a month on different news feeds. Yeah, so there's a ton of news feeds. For my news, the data sources are up to 30, ranging from the big Bloomberg, CNBC, all the way down to forums. So you can see here, yeah. So it's the same one. I forgot the name you used, RSM. I don't think I had a an acronym, but all it does is just goes out to a customized news feed. RSS. Oh, RSS. That was the name. RSS. Um, but coming back to, you can see here, Claude I use a lot. That's a total dollar amount I'm using. Um, So Claude and Haiku I'm using the most, but I did measure the cost per dollar. You can see here it's quite expensive, but when you get into Twin 3.7, it's a massive difference. And everything comes back to there's that plus your quality of output. So if you're looking to generate code, um, Claude is still number one. Codex is okay, depending upon what you're trying to do. But Codex 5.3 I use because it's a happy balance. And then yeah, so here's the Mimo V2. That's a Xiaomi. That's what I think is DeepSeek 4. So that's getting pretty pricey. Yeah. So let me just put that in there. So I'll put the answer. So for you, Brennan's RSS. Just look for RSS news feeds. You can. There are free ones, but they're not going to give you exactly the level I'm doing it at. Any of you guys got questions or comments? Anybody got comments, questions? No problem, Brandon. Thanks for your tips too. I'll go through what you suggested on the P score. I could do that on what I have. I don't know how fast your Monte Carlo simulations are if you're using it against with a GPU. But I'm just the problem is you have to find a happy balance between news and code, strategy code, or trading bots for the youngins, where the strategies are pretty close to trading based upon news. But what I'm finding is news might not be as a big factor as you think, because it comes back to what I said earlier on the on the strong upward momentum trades. Uh, as it said here, this stuff, or I'm sorry, yeah. So this stuff matters. The strong momentum trades. Even with Python, 1,000 iterations is 15 tops. Yeah, but that's per instrument, right? So that's going to be too long for my well, actually I could probably do it on the ones I'm interested in trading, but I'm afraid if I add that to the mix, it probably will reject everything. Then I'm not able to trade. But I think for most traders or algo traders, there is an agreement for sure to be the most successful at trading and most profitable is to always look for instruments that give you a strong level of profit over a long period of time. And as I showed earlier, the copper is probably your best bet. As I said, I can also at any point convert over to C++. I'm on Windows. So C++ is a major pain in Windows if you're using a Microsoft compiler. Um, the only reason I'm on, I could technically move over into Linux, but the problem for me is at some point I may need to start using Rhythmic Trader Pro, which is Windows only. So that's why I have to stay on uh, on Windows. And if you're using C++, your only option is on Windows, unless you go with a Diamond API. You can definitely use a Red Hat a compliant Linux like a Fedora, whatever else. Like what's the other one? But yeah, you can do that, but you got to. It's very 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 expensive as an option. Anybody else got any questions or comments? Sorry for the mess up on the prior stream. I'll get rid of that on my channel, but I'll keep this. I think for my own sanity, this notion to run two separate streams is pretty time consuming. Uh, See your questions, Brandon. Let's see here. Hopefully, CNNS has got the stream working okay. So your prior questions, I have accumulated many years of tick data through IBKR on natural gas, NQ, and so on for futures. Do you have any wheat strategy? Yeah, I have looked at wheat. See here as one example. Uh, let's see if it. They're always losers. Not enough volume in them. So I believe Z is it ZW that's wheat. Um, so to trade that, it's just not worth it because of the volume. It's not very good. I do think food will be a hot commodity once we have shortages of food. Whenever that's this year or next year, obviously that will be good to trade. I get your question. There's always soybean, wheat, and all the other ones. Yeah. So yeah, I like Linux Mint as well. Yeah, I mean I think food will be a hot commodity. That's been hinted at many times over because of the food shortages. And it's a good way to trade inflation as well. Because if you can make money on the food costs as it's going up, it helps circumvent your losses that you're paying out at the retail level. Same with gas and oil. As the costs go up, you can trade those for profit and you can balance it all out. I'd imagine weather is also a big. There will be crop reports. Yeah, I mean, um, as I said, I showed you in the report on the weather. Yeah, don't mention that, but that will be built into the option chain data, right? Because that's in the option chain of data itself or the future contracts, like farther along forward contracts will be impacted by that. So that's all automatically built in the data. So I don't think you really need the raw data. It's good to know about it through the news, through what I'm showing you here. But in terms of actual impacting your calls, I think those are all already be impacted in the option chain data for sure, and open interest as well, and your black for your volatility via implied volatility to measure that. Have you guys got any other questions or comments? So hopefully, I did see some trades today. One trade go through. Hopefully, I'll be able to do it, and I'll have to tweak it to make sure it focuses on micros, not the full contract, and then I have enough to open up trades. Because it depends upon how many contracts you have in your orders, or sorry, in your positions that you're taking out based on the strategy. Because some will have six contracts, three contracts. So as an example, if I'm trading a micro oil and it asks for four contracts, I should be able to cover that no problem as long as there's no other orders open at the time. But again, that type of trading I'd rather do on Rhythmic than Interactive Brokers. Because as I said, I'm only trading on Interactive Brokers just to show third party verification. But the real opportunity lies in Rhythmic. But on the other hand, I should mention this. The DXY can move up, and I want to add that as part of my subscription in Interactive Brokers. So I will need to subscribe to the ICE bundle as well. Actually, it's cheaper than Rhythmic, but yeah, ICE I believe is only $15 or $20 per month in addition to the CME. Have you guys got any further questions at all? Here, I'll put myself on. Uh, yeah, so you guys have any other further questions or comments at all? Just waiting around because we're coming up to 8:30. Oh, got to hop off. Good luck. No problem, Brandon. If you want, I'll end it too, so we're not hearing from anyone else. If anyone else got a comment or question, let me know. I'm surprised I didn't get a question how to get started in algo trading tonight. It's normally the most popular. Thanks. Good luck, Brennan. If you're on my email list, that's great. Then you'll know about my webinars that I do. I could do more. We'll see what happens. Hope somebody likes something. Let's see here. Yeah, 'cause Brandon was the only one talking. Anybody else got any questions or comments? Let me know. This last stream is an hour, 22 minutes, so we're coming up to the normal time. Anybody comments, questions? I'll do it going once, twice, three times, and we'll end it. But yeah, I think the back testing is the way forward, not the simulation. That helps somewhat, but you want to find those strong trending contract or instruments. Then you have a higher probability of getting not just trades, but profitable trades. First for me is to find the trades and get them executing against live money. Been trying for the last 3 4 days with gold, no luck, and showing you what I showed you with the declines. That's why. So there's less trading out there for it, but there's lots of decent looking volume for both natural gas and copper because those are trending as well. So I'll do. Nobody's got any questions. I know there's a delay. If you want to type up something, let me know. Um, going once. Going once. Going twice. We're waiting for comments or questions. Going once. Going twice. Going three times. I guess not. I guess we're done. But thanks for joining, folks. I'm hoping to talk about some live trades next week, knowing what we've got, and hopefully they'll turn into something another a separate session. Again, apologies for the prior when I started this prior stream. Didn't realize on that. I just didn't think it was as bad as it got. But here we are. We got it working. So thanks again for everything, and we shall.